Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the mid-week market update. Quite a weekend it was, with some significant downward pressure, bearish activity, volume, a little bit of emotion there at the end with some capitulative enhancement, let's say, on the volume side of things. I like to look at the on-chain stuff first, and then we'll get to the technicals, something I'm personally feeling is more impactful most of the time, but you can't ignore the on-chain activity, certainly. If you look at the transaction counts on BTC and ETH, just the most basic bare bones on-chain activity metrics you can look at are transaction counts and active addresses. For ETH's transaction counts have continued to remain relatively flat, not down by any means. You know, there's still like a significant amount of activity on here, especially relative to any other year for ETH. We're talking over 1 million transactions a day, sitting at 1.2. So that shouldn't be considered bearish by any means. BTC seeing a slight uptick in on-chain transactions per day, sort of in this multi-year range. I value transactions on ETH more than BTC, and I value active addresses on BTC more than ETH. They are flipped, so maybe that's just my bias, but both active addresses on BTC and ETH BTC on the top here are declining or have been declining since November. So one thing to watch for in the future, the question is always, does on-chain activity lead price? Does it lag price? Collectively, you know, if we're pushing downward, one thing I want to see is, does on-chain activity pick up towards the bottom? Hasn't yet, by the looks of it. This is a monthly average, so it's hard to say in the near term, but I would definitely like to see on-chain activity picking up here if trend metrics were bullish. And if we're talking about bullish trend metrics versus buying opportunities in a bear market, not investment advice, but me personally, what I did is DCA'd in a bear market. So some of the best buying opportunities for long-term time horizon people are not in a raging bull market, right? You sort of want that drawdown or drawback, pullback in price. So it makes sense to me that on-chain metrics are the way they are. They aren't raging like they were in 2021. They're more muted and down. Now, if we look at some other metrics, curiously enough, again, on-chain related, just strange behavior, I guess you could say, relative to price. This is from Glassnode. Previous data was from Coinmetrics. But if we look at on-chain Bitcoin exchange balances, in general, as you see a rise like we did in 2018 in the orange here, as balances on exchanges rise, price tends to go down. This is usually an inverse direct correlation. If you're sending coins to an exchange, you don't really do that for most reasons other than selling. There are staking initiatives that you can participate in on these exchanges now, but for BTC specifically, that doesn't currently exist, although there are lending vehicles available to you. But anyway, the point is here, we didn't see a massive spike in exchange balances, kind of like we did in April, May 2021. I believe this was, it could have been rougher. I forget the exact entity, institutional entity. But this made a lot more sense to me because we did see that rise in exchange balances. Currently, again, like I said, we are flat. If not anything, we are down. We are at multi-month lows. We're ready to push lower. So we almost haven't seen on-chain activity this low, or balances on exchanges this low, since 2018. So to me, that suggests that hodlers are continuing to hodl, and a lot of this activity, price activity in the near term, is short-term traders or new entrants, new participants into the market. And we can look at this in a few different other ways. We can look at coin days destroyed, and what this does is measure the time component of when a coin has last moved. And when you're talking about coins on an exchange, miner balances, coin days destroyed, it's all looking at the same type of data. We're trying to see who's holding, who's not holding, who's moving coins. Again, if we compare and contrast this to 2018, even the rise up in 2017, this is just another measure of human behavior because you're seeing coins get deposited or moved. Again, you don't move coins unless you want to sell them for the most cases. You know, that's my logic and argument anyway. But even on the way up, this could be miners, this could be your neighbor, it could be anybody. They're moving coins probably to be sold at that point. Just as it looks like there was a giant capitulative type event here, potentially, as an entity moved coins that hadn't been moved in a significant amount of time, or multiple entities, right? This doesn't mean it's just one person, but nevertheless, we didn't see that in this down move at all. We're seeing a slight uptick in coin days destroyed, but generally, we're not seeing these massive peaks and troughs that we've typically seen. And we can also look at miner balances, which have also continued to increase throughout all of this. And it's important that you trust your data, because if Glassnodes is not incorporating all of the data necessary to get this viewpoint, then obviously the viewpoint is compromised. But let's assume the data is near perfect in that miners are continuing to hodl despite price declines. And one reason for miners specifically is they have, it looks like, begun to embrace or be exposed to something like a Bitcoin-backed loan. This is just one example from one mining company. I don't have all the data for all the miners out there, but again, unusual that we're seeing this type of muted on-chain activity for 50% downswing, right? This is telling me miners are either getting loans for everything they have, or they just don't care about price right now. It could be a mixture of both. But another metric to look at that I don't have readily available is the break-even prices for miners. And if we do go lower, that's certainly something that a lot of people are going to start looking at in a serious way, because in 2018, I believe the break-even price for miners was around where we ended up, right? So if things go turbo bear, which certainly isn't the expectation, if this then that, but that is something people will be looking into, definitely. And again, relative to miners, we can look at another metric called the Puel multiple. For me, all of this stuff is really, again, human behavior, human activity, looking at, okay, what is the issuance in USD today versus the past year? If issuance gets extremely high as a relative multiple, as in the miners are making way more than they did in the previous year, they're probably going to be selling. And as they sell, eventually, as natural sellers, they will have an effect on price, or have had an effect on price, seemingly as a correlation. Which is why I like to look at this metric at highs, at lows, because it has been fairly accurate, telling you potentially where price is overbought and where price is oversold. And we're getting to that point into oversold territory for this metric. Something else I like to look at, MVRV, which may be the cleanest of all of the on-chain metrics, because this looks at market cap versus realized cap, which is when coins last moved. It measures the value of coin movement, basically. This sort of incorporates coin days destroyed. This sort of incorporates dormant coins. It excludes things that haven't moved in a long time. So again, when you're comparing the market cap versus on-chain activity, which to me, this is what this is, and we say, okay, MVRV was 8 in 2018, or 9 or 10, whatever it got to as a multiple, and on backtesting that holds up historically. That's going to be something people pay attention to. So even in 2021, this didn't quite get to mega overbought territory, but it got pretty close. So currently we are at 0.8, which is a multi-month low. We haven't seen MVRV this low since May 2020. And what this says is, as market cap decreases, on-chain activity or coin movements are relatively sustained despite prices declining. So as an oversold signal, as an oscillator, we're getting closer and closer. We're not quite there, and it doesn't mean we need to get to that lower bound zone on the Z-score, but it's definitely something I will be closely watching this quarter into Q2. And I don't have the same depth of data for ETH, but very similar logic can be applied to balance on exchanges, for example. ETH is a little bit different. There's a lot more utility for the coin elsewhere off exchanges, as in DeFi, NFTs, OpenSea, this sort of thing. But again, you can see the same type of inverse correlations. As ETH on exchanges declines, price typically rises. As ETH on exchanges rises, price typically declines, just as it did throughout much of 2018. A lot of this was ICO related. ICOs collecting funds, and ICO treasuries selling funds. And again, a bit of an oddity here, which is why personally I thought ETH would do better at the highs, is that these exchange balances continue to decline. They've picked up slightly over the past couple weeks, but in general, these are back to 2018 lows. So this probably goes without saying, but if you're bullish, you want to see coins just continue to get squirreled away. If you're bearish, you'd want to see coins deposited to exchanges. But as a signal, for me, tends to be pretty clean. We can also look at ETH 2.0 staked, which continues to increase, right? And this is part of the reason why, depending on how this is counted on Glassnode, but I'm assuming ETH 2.0 wallets are excluded from exchange balance wallets. But this represents another supply lockup, at least until ETH 2.0 gets deployed, at 9 million ETH currently being staked, which is a significant amount of the circulating supply. All right, let's flip gears to technicals. As far as fundamentals are concerned for on-chain stuff, there is a bit of a divergence between exchange balances, on-chain activity, and price, in that even with prices declining significantly, on-chain activity is still relatively robust, let's say, which is why MVRV continues to decline instead of stay flat or rising. One of the best indicators I like to look at for, again, this is just an oscillator, overbought, oversold, is the 2-year MA multiplier. In the green here is the 2-year MA, and in the red is the 5x multiple. And historically, this has picked out the oversold, overbought zones quite well. And we are fast approaching that oversold zone here at 30K. For BTC, this has been variable length in this oversold territory from a period of nearly a year to a quarter or two to, in March 2020, a month or two, right? So this doesn't necessarily give you timing on duration, but it does give you a pretty good idea of where, based on this specific indicator, we're approaching historic oversold territory. So for oversold on MVRV and we're oversold on the 2-year MA, for me, that's enough to tell me, hey, if I'm a buyer, not investment advice, but if I'm a buyer, that's a better time than at oversold territories, right? For ETH, I don't have as much data on this because ETH didn't start trading until 2015, 2016. But again, this gives you the same sort of outlook for overbought, oversold territory. Doesn't give you duration, right? This may be a month, maybe 12 months, whatever it may be. ETH is actually already in this area. It's already below into oversold territory. This also doesn't guarantee that you'll ping pong in between these, as was the case in 2018 to really 2021. It kind of lingered in this zone for quite some time. So there are no guarantees, obviously, but it's telling me on a relative basis, this is the 1-year MA multiplier, by the way, on a relative basis, we're fast approaching oversold territory. Something else that everyone's been talking about, from legacy traditional people to crypto people, is the correlations here between traditional financial markets, stuff like the NASDAQ, the S&P, to BTC and Ethereum. You can see the colors of which is which here. NQ1 is a NASDAQ future, but it's important to note that crypto being BTC and ETH, followed the NASDAQ decline here on the 20th. And before then, and really ever since then, BTC and ETH have been almost 100% correlated. And yeah, you can look at the numbers at all this and say that they're X percent or this percent, but ultimately it's pretty easy to see that these price movements, even on the 5-minute chart, are extremely tightly bound together at the moment. And in general, as things get more bearish, you do see price activity that looks like this, where they look identical. As things get bullish, you see outperformers, just as we did throughout most of 21, a variety of outperformers, a variety of uncorrelated activity. So we definitely don't want to be correlated to NASDAQ, SPX this tightly. And it's best if things like BTC and ETH are uncorrelated. So something people are watching for is, where's the decoupling? When is it going to happen? Today, we got a decent decoupling at low time frames intraday, with NASDAQ pulling back and BTC kind of making higher highs slowly, which is a sign of strength at the bottom here. The caveat to all of this is that there is a FOMC meeting tomorrow and the day after, and we may see some additional market reactions from whatever's revealed at those meetings regarding rate hikes or tapering or what have you. So that's something fun to look forward to for the rest of the week. And as far as the general outlook of the range, not much has changed. Really, not much has changed since the beginning of 2021 when we sort of established this range. In general, when you have a range or when you're range bound, you tend to stay in that range. The trend in this case is the range, and the trend is your friend until the end. So the expectation is certainly, much like any oscillator, you start to see buyers at the bottom, you start to see sellers at the top until that equilibrium breaks. And especially based on the weightiness of this volume profile, which is these vertical lines here, this is the VPVR volume profile of the visible range, we fell into this zone quite nicely and are trying to find some stability here. The last time we were in this zone, it took several months to bottom out, so I wouldn't expect a miracle, but we do have a bit of a safety net so long as we hold within this zone. You can see where the resistance lies on the upside. This is the 200-day moving average. Let's say we have a full mean reversion party tomorrow or this week or 2 months from now. The 200-day moving average is a great place to look for that. You also have a significant volume resistance area here at 47K. Something else I'm watching for always is any type of divergence between RSI and price. Just as we had a multi-month divergence to the bearish side in price here, where we saw higher highs in price on lower momentum successively. You don't always see it, but you often do, is a higher low in RSI and a lower low in price. Now that's dangerous because it's at the bottom of the zone, but that's something I'd be watching for and be interested in seeing as a sign that bearish momentum is weakening. There's also evidence for this in the previous zone between May, June, July, where you had a series of lower lows on less and less momentum. So we're still safe in the range for now. Things obviously trend-wise don't look great, but we're still in the range. And as far as cloud is concerned, this is another trend metric. Cloud's version of a divergence would be some sort of what's called a TKC clamp. So these are essentially moving averages. They're not really, but we're going to consider them moving averages. And when these flatten out, it tells you that the beginnings of a relative top or relative bottom are in the making. So for example, if I'm trying to touch the crystal ball here and figure out what we may see in the coming weeks, should this be a bottom, is a TKC clamp here, where you see this blue line and red line go flat, much like it did in June, July. And you see this frequently. You saw it up here in October, November, where you see this dynamic support resistance break and you get a mean reversion fully to the key June in this case, which is at 47. So is the 200-day moving average. So if this continues to be the bottom, that's the price I like in the next 3 months, right? Now it may take 3 months for us to get there, as it did in May, June, July. But the first step is surviving this low, right? And the lower we get, the more oversold we're likely to get on chain metrics, and that helps the case for technicals as well. Something else we can look at zoomed way out is what's called a pitchfork. Pick 3 points, you get a rate of change. And you know the pitchfork is real if price respects these zones relatively. Just as we sort of skidded through this overbought territory, we may also skid through this oversold territory. And so long as we stay within this zone, the projection for the rate of change is a mean reversion back to the middle of the pitchfork. So it's also in the back of my mind is, are we still in the range by Q2? Do we survive the range, right? Do we bottom out here? Do we make a bull div? Does MVRV dip into lows? Those are all the things to watch for as things turn extremely oversold. I didn't even mention the RSI, daily RSI hasn't been this low since March 2020. So we really need to hold this range going forward. And flipping gears to ETH has a 50-200 death cross on EMAs, at least yesterday or today. I don't know what it looks like on MAs, but obviously not a great short opportunity, not trading advice. But the trend obviously is not as strong as it was leading into November, right? All the same logic applies here as did with BTC. I think that collectively the TA is relatively simple. Again, you're seeing oversold, mega oversold territory on RSI. I'd much rather see some sort of divergence here to be sure that there's a relative local bottom put in. We have tons of volume support here at 18. There's a yearly pivot at 1950. And we're currently in this fluffy support zone around 25. So it's not completely end of days for ETH either. It's still within the range of 2021. And mean reversion targets sit around 3,400. Just as that TKC clamp, TK disequilibrium And divergences, like I pointed out in BTC's case, is what I'd be looking for going forward into the next week, the next month, because we very well may just chop around down here, right, at lows. Maybe we get a chart pattern, maybe we get an inverted and shoulders, maybe we get an Adam and Eve, maybe we get a W double bottom, right? That all remains to be seen, but we may see those things in combination with bullish divergences and this TK disequilibrium setup pointing you back to 3450. Even if we get up there for ETH, this isn't a full-blown bullish trend reversal. For that, you would need what's called a Kumo breakout or price above the cloud here. So the cloud gives you a series of dynamic support resist levels to look for. But ultimately, first step here is we need to definitively form a bottom. And lastly, just looking at ETH BTC, ETH BTC looked like one of the most bullish charts in crypto leading into December, leading into even January, because it held within this amalgam of Adam and Eve, W, ascending triangle. This was a lot of things, none of which were bearish, right? You look at stuff like this, you say, okay, that's an M double top. Maybe this is Adam and Eve, right? Inverted. But this setup looked extremely bullish, tried to break out in a big way, almost got there, almost got to the measured move, but has reversed pretty swiftly since then. And just like BTC and ETH BTC has significant volume support at 0.5. It has significant volume support at 0.4. It's got the 200-week moving average at 0.45. So none of this stuff should really fly off the handle if the wheels get off the wagon in the near term, because there's tons of support relatively. Now, that isn't always going to save you, but when I'm looking for levels or prices, this is definitely at the top of my list, things like VPVR and EMAs. So that's all I have for this one. What'd you like? What'd you love? What'd you hate? Let me know in the comments below. What'd I miss? And happy trading.